안녕하세요. 인포맥스입니다. 오늘은 영국 옥스퍼드 이코노믹스의 로이드 찬 이코노미스트를 모시고 한국은행 통화정책과 한국 경제 전망에 대해 이야기를 들어보도록 하겠습니다. Hello, Mr. Chan.
Hi, Young Tae.
Oh, how about hi to South Korean market participants?
Hi, everyone. Hope
Okay.
everyone is doing well. Even though COVID-19 is still going on. I hope everyone stays safe and healthy.
So, shall we start with the first question?
Yeah, sure.
Okay. So the Bank of Korea is having a policy meeting this week. So, would the central bank hold its policy rate this time?
So, Young Tae, I don't think we will get to see a policy change this week. I think that the BOK will likely keep it at 0.5%, right? There's just so little room left to cut interest rates further. Interest rates are already so low. And I think the BOK will want to conserve what little policy space it has left, unless we see growth and sentiment worsens very substantially from here. And what we have seen with lower interest rates so far is that borrowing costs have been driven lower, but that has also driven a lot of liquidity into the housing market. So as you know, property prices are rising very quickly, while Korea has a lot of household debt. So I think there must be concerns about a housing bubble potentially forming. And really the question is, how much more can further interest rate cuts do to help the Korean economy? So I think that the BOK will keep monetary policy the same this time, leaving the policy rate at 0.5%.
So the housing market is hot right now. So some calls that BOK should respond to this financial instability. So what are possible measures that BOK can take?
Right. I think policymakers are facing a dilemma right now. On the one hand, we have weak growth that requires interest rates to be so low today. But on the other hand, we have what seems to be an overheating property market, and that requires perhaps interest rates to go higher. But I think there's a lot of pressure now on the BOK not to cut interest rates further. But I also don't see them increasing interest rates very soon or very fast, right? Current weak global and domestic conditions certainly don't allow for that to happen, right? So if we look at what President Moon has done since he stepped into office, he has implemented, what I understand, more than 20 property measures, but that has not stopped the property prices from continuing to go higher. So we certainly cannot depend on the BOK just to increase interest rates by a lot to control the property market, to rein in property prices. So I think that there may be something more structural that's going on in the housing market, right? And that perhaps requires a different set of policies to tackle the problem.
What about the stock market? The stock market, like South Korea stock market has seen one of the hottest rally in this world, but it's having correction right now recently. But anyway, should the BOK consider the stock market rally when they decide the policy rate?
Certainly so. I think that it is very important for the BOK to consider the stock market. This is because the stock market can influence the real economy mainly through two channels, right? Number one is through the financial wealth channel, right? So if equity prices go up, right, you will feel richer and you will consume more, right? The second is through financing conditions. So I would imagine that it is easier for companies to raise more cash during a bull market compared to a bear market. So as you have correctly pointed out, Korean equities have rallied by about 60 to 70% from its trough in March. So if you had bought it, you would have made a decent return till today, and until the recent peak in the middle of August. So this perhaps reduce the urgency for the BOK to cut interest rates even further, because the BOK has secured one of the loosest financing conditions in years.
So, but while the stock market has seen the rally and it's been stabilized, but the South Korea's economy has not recovered yet. Why is this happening, and what are possible consequences from this?
Right. I think the short answer to your question is that we are in a very favorable liquidity environment. So what we have seen over the last 5 months, right, is the massive willingness and ability of the Federal Reserve and other central banks across the world providing a lot of support for financial markets, just like what they have done during the global financial crisis 10 years back. And they will continue to do so going forward. The last thing that central banks want is a financial crisis that spills over to the real economy. So markets are confident that policymakers will always be there to build out financial markets. And that's why we get this big disconnect between what we have seen in the real economy and the financial markets. I think the problem with this is that people are conditioned to think that policymakers will be there to provide support for the financial markets. So when there's a crisis, you and I see a very strong policy backstop. We should just go long equities. The mentality, the mentality is that this trade won't go wrong. Why? Policymakers will always be there for us. So you and I will take a lot of risk. Other people, many people will be taking a lot of risk. And it doesn't matter, whether the economy is doing well or doing worse like now, right? So this is what's happening with the financial markets right now. The big disconnect between real economy and the financial markets.
Thank you for the answers. So let's talk about the US and Fed. So Fed is going to have FOMC meeting next month, and Fed implied that it will change the forward guidance a little more explicitly. So how it will influence BOK's policy decision, maybe, or maybe monetary policy stance?
Okay. Yes. So based on what I have seen in the July minutes, right, the Fed did not seem to show an urgency to deliver an explicit forward guidance in September. But I still believe that the Fed will signal to the markets that interest rates will not be lifted until inflation reaches the 2% target or beyond. So what this means is that even if inflation goes beyond 2%, I'm referring to the US inflation going beyond 2%, the Fed will say that it is okay sometimes. This does not mean that the Fed will increase interest rates to bring down inflation to below 2%. So, this all will suggest that the Fed will remain committed to keeping interest rates near to the 0% for the next several years. So in such a situation, the BOK will be able to maintain a effective lower bound for its monetary policy. So what this means is that the BOK will be able to keep policy rates very accommodative over the next several years. The only concern for me is that this is driving a lot of liquidity into the housing market. So how long can the BOK keep policy rates so low? Right now, the concern is the economy. So the BOK has to prioritize supporting the economy, protecting people's lives and livelihoods, right? So I think that once Korea is able to get a sustainable recovery, the BOK should start to consider normalizing interest rates so as to, contain the excessive amount of liquidity in the market right now, as we have seen in the stock market's hot rally and also the surge in property prices recently.
How about the US election? US election is coming, and if Mr. Biden wins, that's going to be a change. And what are possible changes to global market? What changes should global market expect from that? And also, what if Mr. Trump wins again? And that's not a change, but that's going to be an issue too.
Yeah, I think so. I mean, given what we have seen over the past couple of years, right? And for Donald Trump, maybe his policies will continue to be tough on China, right? So I think that this is a testing time for the United States. It is dealing with its own COVID-19 outbreak. And in 3 months' time, as you have pointed out, people will have to go to the polls to elect a new president, whether it be Joe Biden, the Democratic presidential candidate, or Donald Trump.
Mhm.
I think an important question to ask is how would Joe Biden handle US-China relations if he gets elected? Because this will have far-reaching implications on global markets. I think it is a bit too early to tell exactly what foreign policies Joe Biden would implement and what sort of impact that would have on global markets. But what we have seen from his campaigning so far, right? I think the message seems to be that he won't go easy on China either, just like Donald Trump, right? He won't allow China to continue with its unfair trade practices. He will hold China accountable for its alleged human rights abuses. So we have to prepare for a wide range of different policy scenarios. But I think that no matter who wins the elections and gets into the White House, the US will remain tough on China. And US-China tensions will not just disappear overnight. But the good news is that I think the risk of new tariffs remains very low at this moment. If you look at the US economy, it is not doing very well. The recovery seems to have stopped recently. And I don't think the US is prepared to impose new tariffs on China or its other trading partners. So, for Korea, the economy unfortunately will be vulnerable to US-China tensions and any potential escalation of that. But given how bad global and domestic conditions are, Korea will likely continue with its low interest rate policy.
Would you please explain the impact that South Korea's economy may have from the escalating tension more?
Right.
So the export, in the export side, or what kind of impact may our economy?
Right.
Yeah.
Yes. So you're right to point out that Korean exports are one of the most vulnerable to the US-China tensions. Why? Because Korea has a lot of exposure to the Chinese market. About 25% of its exports go to China. So if US impose tariffs on China, that will have an impact on Chinese demand, and then that will spill over to demand for Korean exports. I think that's what we have seen since last year, when Korean exports have not been doing very well because of the US-China tensions. So I think some of the sectors that have a lot of exposure to the Chinese market are semiconductors, those electronic products, autos, and even chemicals. So these sectors sell a lot to China. China is a big buyer of these products from Korea.
So here's a question that I didn't mention earlier, that it's about North Korea. So North Korean Jong-un, he's like, it seems like he's handing over powers to his sister Kim Yo-jong recently, and the political leadership changes seems to be happening right now. So is it going to affect the foreign investors' confidence? Maybe foreign bond investors who buys Korean government bonds.
Right. I think relations between South Korea and North Korea has always been very rocky. And today, when I saw tweets about Kim Jong-un going into a coma, I don't know whether that is true or not. And then his sister, Kim Yo-jong, will probably take over if something does happen to her brother, right? So, but I think that we cannot rule out the possibility of, border skirmishes. But I still think that a broader military confrontation looks unlikely, as it would be a lose-lose outcome for both Koreas. So no matter it be Kim Jong-un holding the reign or his sister succeeding him, I think that a broader military confrontation looks very remote at this moment. And history usually shows that North Korea usually increases tensions a lot but eventually this proved to be very short-lived. It only lasts for a very short period of time. So just in July, the North unexpectedly blew up an inter-Korean liaison office, right? That signals to us that North Korea is no longer interested in diplomatic engagement with the South and the United States because it has not been able to get any sanction relief from the United States. So if we look at the past North Korea's provocation and its impact on financial markets, it seems that financial market has looked through any North Korean provocations in the past. So like in 2017, we saw North Korea testing a lot of missiles, right? And then there's also tougher sanctions on North Korea. But what happened to South Korea's financial market? There's maybe a short period of declines, but then after that you see the stock market continue to recover, and then the long-term uptrend in South Korea's equities continue for that year. So I don't think that there will be a lot of impact on investors in South Korea from North Korea's provocation.
Okay. So last 3 questions here. What is Oxford Economics South Korea's policy rate forecast for this year?
Right. So I think that the BOK will keep policy rates unchanged at 0.5% for the rest of 2020. So there's no change to what we have been forecasting the previous month.
So the rest of 2020 is going to be 0.5%.
Yes, that is our baseline forecast. But of course, that really all depends on the COVID-19 situation. So if it gets worse and there could be a bigger hit to consumption, investment, exports and confidence, then perhaps the BOK might need to provide more monetary policy support. But then there's also many other things that the BOK need to consider, right? So if the BOK lowers interest rates further, that could drive property prices even higher, right? So I think it is a difficult job for the BOK now to balance between supporting the economy and containing the property prices.
If the COVID-19 crisis gets worse in South Korea, does the BOK has enough room to cut rate further? It seems like it's onto the limit.
Yes, I think that the runway is running out for for the BOK. I think there's very limited room to cut policy rates further. So other than interest rate adjustment, I think that the BOK can also consider other non-interest rate tools to provide the necessary support for the economy.
Like ETF purchases like Bank of Japan or corporate bonds? Like what kind of?
I think so I think the BOK has also provided some support for the establishment of an equity fund and corporate bond fund to provide support for those markets. And as what we have seen over the past few months, the BOK has also pledged to provide unlimited support through the repo market. And the BOK has also purchased some government bonds to finance part of the fiscal budget. So these are some of the steps that the BOK can take to provide support for the market and the economy, of course.
So what about the growth expectation and inflation for this year?
Right, so we have seen oil prices very low, even though it has bounced back recently. And then we get this coronavirus-induced weakness in domestic demand. So these two factors combined is going to keep inflation very subdued this year. So for our forecast, we expect inflation to only come in at 0.2% in 2020.
So what was the economic growth rate?
Right, so our forecast for that is a 1% drop in Korea's GDP this year, before a rebound to a 3% growth, 3.2% growth in 2021.
Thank you. So I think these were the questions we prepared, and you prepared good answers, and your views is going to be very helpful to our South Korea market participant, I bet. So right. I thank you behalf of the Korean market participants. Mr. Lloyd Chan, so I hope we have another interviews sometimes again, maybe about another topics anyway. So
Sure, of course.
so okay. So thank you for so much, and I'm gonna close this interview with Korean. Okay, do you mind?
Okay, sure.
Yeah.
Yeah, no worries.